And I mean, it's tough for the people who came in with the expectation of a quick buck and a quick flip, but that's not what is going to work anymore. And like the jig is up. And I am very excited about us transitioning through, and the people who want to be on that other side of the transition are going to be there with us. But yeah, the people who weren't, flavor of the month type people were never going to survive anyways.
This episode is brought to you by Aries Markets. To learn more about Aries Markets, follow the link in the show notes below. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Bell Curve Roundup. You got all the fellas. Michael's 1 and 2, Vance.
The triumvirate.
You giving us guns?
Dude, I saw you getting flamed today on the timeline, Epo.
Yeah. Yeah.
I missed this. What
taking our licks here. Someone wrote an article about movement. It was Jason is an angel in movement, and Kobe flamed for being too generous, and Jason, just the idea that Jason invested. So yeah.
And a G move to you, sir.
G move. Yeah. I mean, I think he's right that we do disclosures. So we update those every month. We haven't had angel investments on there historically because founders, there's like a huge gap in between when a round will close and when they announce. But we're going to put those on there. I think that's totally right. But also part of the joy of running a media company is we had no idea that this article was coming out, obviously, and neither did the guy who wrote it. No Jason's involvement here. So it was some good honest pushback, but
I do respect that there is actually like a Chinese wall between, Blockworks Media and like the rest of the company. I just think, with the Chinese wall comes a lack of visibility when things get written. It happens.
I know. It's almost like having a loaded gun pointed at your head sometimes, but that wall exists for a reason. It's like good reason for that to exist.
The best way to walk into a negotiating room is with a suicide vest on.
Yes. I'm taking hostages.
Did you tell our president that?
Bro, the Mandem, he's off his rocker. You gotta calm him down.
Yeah, what do we think about this? I mean, you know what the funny thing about his like madman theory art of the deal stuff is that everyone kind of knows what his art of the deal. Everyone knows these tactics. So how effective do you think these tariff negotiation strategy is at the moment?
It depends on what he's trying to be effective with, or like how. Like what is the outcome that he's driving towards? And look, I think we may have talked about this a bit last time, but just to reiterate, the two data.
This is a macro pod again. When crypto's down this much, this is a macro pod.
What's going on? I'm taking shells. The two data points that we track are the GDP now and the inflation now cast from the Atlanta Fed and the Cleveland Fed, respectively. GDP now has fallen off a cliff. Went from like 2% plus a positive 2%, 2.5% to like negative 2.5% in the last couple of weeks. The 17th of March is when the next print comes. So it'll be interesting to see if like 2 is a trend, 3 is a pattern. We saw a lower inflation print than expected 2 days ago, or yesterday, whenever that was. And the month over month for March, and we're 13 days into March so far, but the month over month CPI is 0.01%. So inflation is also starting to come down. And look, if the desired outcome here for tariff policy is truly to like have tariffs be the way that you fund the government, it's going to get messy. I don't know if that's really the intention here, but if part of the strategy is let's have things reset, let's have inflation come down, let's have growth, have to reset its expectations. Doge, I think, is not actually doing as much of the cutting as people would have expected. Go figure. You can only delete so many Microsoft SaaS accounts to be able to make a dent in the budget. But
the hardest though.
Yeah, there's a lot of them, but it's not trillions of dollars worth. But I think if the desired outcome here is a reset to rebuild, then we're probably pretty close there. And what happens when it gets to such a bad level where growth is potentially in the crosshairs, inflation is completely down, If that's the case, then man, 4.25% interest rates are looking pretty high, and that's kind of the next point of the conversation. And dropping interest rates ultimately is, asset values, asset prices are the biggest beneficiary there. But the other thing that we were just talking about, kind of collectively, is like, what does that mean for DeFi in particular? To bring it back to crypto a bit, if the Sky savings rate is at 6.5% right now, the difference between 4.25% in a money market account versus 6.5%, not that huge. But if you're at 1% versus 6.5%, that's a pretty big difference. One of our LPs asked us where we think stablecoin supply could be at the end of the year. Hard to say, but we're at about 240 billion right now. If there's a real discrepancy between what traditional markets are offering and what DeFi can offer from a stable rate perspective, we could easily see that double. And, our bet was 500 billion by the end of the year.
Do you guys have a sense of how yields in TradFi flow through, or what the correlation is between TradFi yields and DeFi yields? Like my sense is that there are a couple of different yield sources that go into something like USDS. There's the desire to borrow against like Bitcoin or ETH, right? There's like what Athena is importing, which is like CeFi leverage. And then there's one other one that I'm blanking on here, but it's basically just the
RWAs, like private
RWAs. Credit. Yeah, exactly. So
let me show you something wild. Let me show you this. So like the actual
and Vance, while you're pulling that out, just to finish that thought, is if the economy collapses, like the traditional economy collapses, I would guess that borrow demand collapses as well, which might impact that USDS savings rate. But
yeah, I mean, basically what's happened is like the Athena perp yields have come down, and they're like, the least sticky of all yields, because like you can put on and take off perp positions and that spikes or drops the interest rate. When you're in a CDP, basically it's like you've locked your crypto in that, and the only way you can get out is repaying your debt in full. And so like those are the stickier, higher, longer lasting yield components that is the reason that Maker is able to offer such a high Sky savings rate. But when you look at the actual composition of like where DAI is coming from, so like this is in 2022, there was 10 billion DAI at this point, and only 69 million was in the DAI savings rate. And now you look today, and there's like a billion in the DAI savings rate. There's 3.333 billion in the Sky savings rate, and these are just like the different names of the different stablecoins. But like the vast majority of DAI today is created from stablecoins, which are then going off and earning the Sky savings rate from the high yields that are in these CDPs. And like now Sky is in a position where it's like they are the largest, they're compounding the fastest. Like if there's like a spike in perp rates, like they can just go allocate to that and kind of like squish it down. So like it's like stablecoin do this weird thing with network effects, where what really, really matters, as in social networks, is like not only how strong your network effects are, it's like how big you are. And like if you're the biggest, you compound the fastest, and you're able to take advantage of the yields, because like you are the person who sets the rates in terms of like, okay, Athena yield spike, you go allocate to that. Okay, they're too low, you take it off, and you like let those yields rise a little bit. But like I think Sky is kind of in control of the yield market at this point. And what we're focused on right now is like endgame and all the things that are happening with Sky and hanging out with Rune. But B, it's like we're trying to get very high yielding, very safe collateral as backing assets for these stable coins, so that we can pass it through to people who use USDS. And some of the things we're looking at in the energy space are like 30% plus APY with instantly liquid redemption and a high margin of safety.
And to double click into that, I think, Mike, to your question, it's like, okay, you assume the crypto collateral rates are probably going to drop if interest rates drop, because demand for borrow is probably not as high. You've got RWAs, maybe some of those are set rates depending on the structure of them, but you assume that if rates come down, those rates probably come down too. Those are correlated with Fed funds rate. I actually think there's a pretty strong argument that Athena is uncorrelated or potentially inverse correlated to Fed funds rate. If you've got perps really blowing it out because activity and excitement is coming back into the market, like that actually jumps the yield of Athena, and so maybe you like kind of allocate more in that way. But the real goal here is to kind of pull in yield sources that are not correlated with interest rates or Fed funds rate. And that's where, the big bet here is going to be on energy.
Yeah.
Yeah. I mean, energy has been
actually, sorry, just to double click into that a little bit more. Energy and the source of the yields of energy is from the power purchase agreement revenue of the actual energy sources themselves, as well as the incentive tax credit in the United States, which can get basically like repurchased by someone who can actually use it. That stuff is completely uncorrelated to interest rates.
Got it. So is the idea here basically to just keep pulling in this, like treasuries was maybe the first like easiest form of, TradFi yield, and then you're just going to keep pulling in disparate sources of yield to buttress protocols like Maker or, Morpho or whatever? Is that basically the, yeah.
I mean, like, I think kind of the framework to think about it is like you want to be as close to the issuer as possible.
Mm-hmm.
You want to be kind of close to USDS, you want to be close to Tether, and then you want to bring on backing assets that are really interesting and people can loop.
Mm-hmm.
And like you are long credit spreads when you're doing DeFi lending, and that's where the macro is going, at least over the next, probably 18 months, 24 months.
This episode is brought to you by Aries Markets. Aries Markets deployed on Aptos in 2022 and is now the largest lending protocol with $280 million in TVL. To learn more about Aries Markets, follow the link in the show notes below. This episode is brought to you by Marinade. Marinade is a high-performance staking delegation platform that brings both liquidity and security to the Solana network by connecting SOL holders with the best staking rates on Solana. Follow the link in today's show notes to learn more. What do you guys think about this next 18 or 24 months? I know when we did our predictions episode this year, everyone was pretty hyped up and bullish about 25. Like, how are people feeling about everything now? I mean, I think that the cycle, framework is probably not super useful here, but, how are we feeling about just the rest of the year going into 26?
A lot of really upset.
A lot of people, first of all, it's every asset class. Like KKR is down 40% in a month. Tesla's down 55%. Like, it's like, I think one of our maxims is like, you shouldn't necessarily overdetermine the future of like whatever you're doing when like global stock markets are in a correction and individual like blue chip stocks are like down 50%. I do think it's just like useful to fade the consensus on a lot of fronts where everyone thinks it's like Trump's super cycle. It's like, well, maybe it's like you need to survive the first 6 months of the administration, and then it's Trump's super cycle. But I generally feel pretty bullish for things that are, like basically able to pass, other things like Bitcoin, like ETH, like a lot of the DeFi and lending and just like things that have actual fees and buybacks. But what I think has changed is like not just like a sentiment reset, but there's also been like a psychology reset where it's like, okay, it's not just like pile into any alt and it's going to go up more than Bitcoin. It's not just like, okay, we're going to try the meme coin super cycle again and hope it turns out better. It's like, I think we're done with that. Like, party's over. It's time to like really build and shoot glass and buy back your own token and do things that matter. Outside of that, not sure how much stuff will catch a bid.
I agree. I think that the psychology, if, just comparing at least how I felt in like the lesson, right, of 2022 versus like today, how I think people are feeling is, if you remember, like Bitcoin was almost out of consensus at that point. It was the pet rock or the boomer coin. And you wouldn't have seen that, crypto natives being super favorable about Bitcoin in general. It's all about ETH. And maybe you had some smaller group of people that was hyped on Sol or Cosmos or something. But now it's almost flipped, right? And so the lesson going into this cycle, which is probably why people try to skip to the end with meme coins, is just buy shitty alts and they'll go up the most, and then you can sell them. But the lesson at the end of this cycle is you can't do that. That's not going to work anymore.
I do think there is like, I don't know, the consensus of like Bitcoin is going to keep going up more than anything else. Bitcoin dominance rising. Like we talked about this earlier this week, Michael, but the sailor, like, I'm going to raise 21 billion and buy Bitcoin with it. It's like, well, I think it's, there's like a bear case where it's like, okay, say sailor cannot raise 21 billion. That's pretty bearish because it's like, he's the one guy that's been pushing it up. He's the one guy that has the infinite money cheat code. And like, if the infinite money cheat code stops working, then you need nation states. If you don't have nation states, then you need the ETFs. If you don't have the ETFs, like, they could become sellers. Like, I do think we're at a point now where Bitcoin dominance is so high that other things will catch a bid and it'll be super idiosyncratic. But the Bitcoin bull case is like very well articulated in consensus. I do think there are holes in it, but I mean, look, we hold a bunch of Bitcoin. Like we have bags of all flavors. We're aligned with generally everyone, but I think like Bitcoin is also like in a place where ETH was like probably 2 or 3 years ago.
Mm-hmm. I agree. Yeah, I totally agree. Actually, someone said something pretty interesting. Let me see if I can find this tweet. Actually, I thought it was very interesting the way that they phrased this. But someone said, I think it's true. This is maybe a bear take for ETH here, but I think there's actually something very interesting in the way this was phrased. I think it's truly over for ETH. Even if it rises 1,500 to 10,000, it won't outperform BTC over that period from the current ETH BTC ratio. Maybe the staked version will by peanuts. And I feel like actually that last sentence is the bull case for ETH in the, like, there's a bullish idea in that bear thesis, which is that, yeah, this is what I've always thought too when people talked about how gold, like those charts of like the dollar going down over time. It's like not if you staked your dollars, right? Right. That's what bonds are. And I think that's the long-term bull case for these L1 assets, right? Like, okay, there's the price performance, but you have to layer on the yield there in terms of the return. And like more sophisticated investors over time will layer that yield on. Like, I just thought that was a really interesting way to say it. Like, you're so bearish on ETH, but you said it's going to outperform Bitcoin. Like,
right.
I just thought it was an interesting phrase.
And you can restake it and you can borrow against it and do things with that money. Like, I would check this today, but from the time we launched our last fund, Bitcoin is up, I think 15%. Like that was, 2 years ago, 3 years ago. And people were like, ETH is still flat from 3 years. It's like when we launched the fund, Bitcoin is up 15%. Like, if you like, the hardest way to beat Bitcoin is to hold a bunch of Bitcoin. Right. Like, you got to go further out the risk curve, and like that's like candidly the conversations that we're having right now. It's like, okay, like we're probably close-ish to like liquids being pretty interesting, but like, what do you buy? And the answers, like, I've pulled a bunch of group chats and friends and communities. Like, the answers I've got are like, oh, you should just buy a bunch of Bitcoin, but like in massive, massive size. Like, okay, that's pretty risky. Like, you got anything else? It's like, well, just like buy Hyperliquid. It's like, okay, that also sounds kind of risky. You're like, what else? Like, those are the only two ideas that anybody has.
Mm. Do you think, I spoke to someone this week, where and he works at a token project, and he was describing, because I've been saying like this is kind of a Goldilocks time for builders actually. And he was like, this sucks.
Glass.
Yeah. Well, his perspective having a liquid token, it was very interesting. It's like one of our challenges historically has been that a token, you can launch a token, have it go to 1.5 billion FDV overnight, and you can duke out these massive packages, right, to recruit people. But now that all the tokens are going down, he's like, the psychology, like the day-to-day psychology is brutal. Like, I spend my time just like being like, hey, it's going to be okay. The token price is going to go back up. And it's like, wow, it really just depends, right, on where you are in how token prices are going. But it can really, the sword cuts both ways, right?
Launch a token, they said. It would be fun, they said. I mean, look, like, party's over. Like, you want to launch a token? Go launch your token. Tell me what happens. Like, and guess what? Like, I think like good, bad teams, amazing teams, like, it's kind of the fate is all going to be the same. Where like, if you're like primetime viewing, congrats, you launch at like 2 to 4 billion, and then you can duke it out, go up or down based on how real your thing is. If you're anybody else, then it's like you're launching at 500 million, and you are fighting in the trenches to go up from there. And like, that's probably where you're valued at in the private market. And so like, it's nothing personal. It's just like, that's where you are. But like, the people who stick it out, they're going to make a lot of money. Like, you have to build something valuable for it to be valued highly. But like, if you're not building something valuable, then like, in my mind, you're like a bad actor, and we need to flush you out. And like, I have no qualms about selling or shorting those assets. Like, it is what it is.
So Amazon, during their stock peaked in 1999 during that like lead into the tech bubble, how long would you imagine it took before it reached new all-time highs?
Something like 10 years.
Yeah, no longer. I think it was 2013 to hit a new all-time high. Am I right?
It's 10 years, 2009. Yeah, 1999 to 2009.
10 years.
But Vance it like kind of, before it convincingly broke through, it's another couple of years after that. I mean,
yeah,
a long time, right?
And you listen to like Brad Gerstner had a section on his pod at some point about this, and he was doing so like Fred Wilson has like a similar anecdote where like he started this fund called Flatiron Partners before USV, and Flatiron Partners was like basically a crypto fund in the late 90s, but like they were investing in like internet stocks that were valued on like bullshit metrics, and like I think the fund went from like 100 million to like 6 billion or something like that, and then it went all the way back down to like 60 or 70 million. Like his LPs lost money. And like there's a speech that he gave, I forget what university he was at, but he was like, like it was like fucking traumatic. Like I had to like go and sit for like a couple of years and like write down what I learned and like start to put the pieces back together and try to invest in real things. And like when he tried to raise his next fund, people were like, aren't you the guy that blew up your last fund? And like, you're really going to try internet investing again? And it's like, I think there's some parallels here where it's like, everybody knows that meme coins are ridiculous and not going to work. Like the facade has dropped. There's only real things behind the curtain at this point. And if you're willing to put in the work and chew the glass, like you're going to do pretty well. But if you're not, like you should rip off the Band-Aid and go work in big tech, but they're not hiring anymore. Or you should go work as a software engineer, but that doesn't exist anymore. Or you should go do something else that doesn't exist anymore. But like,
dude, I listened to.
Are great for you. You should definitely fuck around and find out.
I actually had to laugh at this. I don't want to make fun. I was listening to Jason Calacanis is describing, all these jobs that were going to get created to AI. He's like, you can make, $30-$40 an hour fact checking AI. We're going to create tens of thousands of fact checker jobs. It was like, dude, who wants that?
Wake up every morning. All right, time to log into my job.
Misspelled THE.
Yeah,
fix that.
The sentiment is like universally terrible, not across just all asset classes, but across like even startup verticals and like software. Like YC demo day was yesterday, and like we were talking to one of the guys that went to it last night at dinner, and he was like, dude, everyone's building the same fucking thing. They're trying to build Cursor for Microsoft Office. They're trying to build Cursor for Microsoft Excel. Like I saw some tweet that like, there's like Notion, there's like, like all these kind of like creativity Figma software, and like their tagline is all the same. What do you want to build today? It's like, oh my God, we're all building the same thing.
Yeah.
Like, I don't know. You got to take the better with the better. You got to have a long time frame. It's not just crypto that's going through this right now. It's everything. But like the reason is because it should be fucking hard to build a startup.
Yeah, I agree.
No easy way. And like the days of like VCs launching coins at 10 billion and like immediately selling, it's like that's over too. We're all in the trenches together now.
The necessity is the mother of invention. I don't know. Like the best ideas that we've come up with at Blockworks have been under almost extreme duress, I would say. So it's just really difficult to actually innovate unless you absolutely need to and your feet are to the fire. Like it's just hard. It's hard to come up with new, interesting ideas if you can kind of spin up another L2 and, launch at 1.5 billion or 2 billion FDV. Like that's actually really bad for innovation. That's a horrible environment for innovation. Like, you don't need to really do anything. Okay, you tweak this sequencer design or that governance thing. It's like, that's not really innovating. I'm not picking on L2s that you could across every single category in crypto. That's the same. So now it's an execution game and a grinded out game. And, the ones that really have the juice will make it. And I do think that there'll be massive consolidation from here as well. Like we just don't need all the stuff that we have. I think vertical integration will continue to be a thing. People will move up the stack. People are thinking from the perspective of front ends at this point. Like, I don't know. I think it'll be a really interesting time, honestly, but maybe not the most fun time. Like fewer big parties and things like that.
Which is totally fine. Like that stuff was temporary in the first place. But I think the bigger thing, the stuff that we're thinking about and talking about with founders that we meet with or that we work with already, is sort of like, how do you mentally survive all of this? And everybody kind of came in, we talked about this over the last couple of pods, but like everybody came into 2025 being like, this is the payoff year. We made it. We survived. And it's just like existential crisis because you're like, wait, I've got another 3 years that I potentially have to wait for like this payoff to happen.
Close and Zillow immediately.
Yeah, you can't think in terms of like I made it or like here's the time I've like identified on the calendar when I'm gonna be this or that or this wealthy, and or like sell and just like ride off into the sunset. It is and if you are thinking that way, like you don't belong there and whatever you're doing. But there are still so many people that have that perspective, like, oh, I'm just going to build this thing. I know how to do this. I know how to do that. I'm going to build this thing. I'm not going to do a company. I'm going to do a token. I'm going to launch it on Binance. It's going to be worth $1 billion, and then I'm going to sell it, and then be like, cool, I'm done. It's that those days are completely over, and I think the market is slowly recognizing that, and there's a lot of people that are really upset about it.
Quick shout out to today's sponsor, Aries Markets. Aries Markets deployed on Aptos in 2022 and is now among the top 10 lending protocols across all blockchains with $280 million of TVL. Aries Markets has expanded its product suite to become a fully integrated DeFi hub combining lending, borrowing, and more. In 2024 alone, Aries introduced several new features to better meet the needs of its users, including native USDT support, an incentive program, and more. Click the link at the bottom of the show notes, head over to Aries Markets, and tell them that I sent you. Hey everyone, quick shout out to today's sponsor, Marinade. Since launching in 2021, Marinade has expanded their suite of products to provide solutions for both DeFi users and TradFi, including liquid and native staking, as well as direct enterprise integrations. Marinade's platform is optimized for institutions to securely expand their exposure to Solana. Whether through the provisioning of custodial or non-custodial yield, integrating staking rewards into Solana financial products, or leveraging Marinade's best-in-market rewards rate for revenue and treasury management. Whether you're in DeFi, TradFi, or somewhere in between, Marinade has something for you. To learn more about Marinade, follow the link in today's show notes. Okay, wait, I'm looking for a passage here. This is like a old... have you guys ever read any of the Ron Chernow biographies of like famous people or businesses? Or he wrote one on John D. Rockefeller, and yeah, I had a okay. So he wrote this about, just listen to this passage that he wrote. This is like early oil industry. This was pre them even figuring out that this was useful for cars, right? This was kerosene, right? So drilling for oil often seemed less an industry than a lottery. No one knew if oil would prove a lasting benefit to mankind or an evanescent wonder. If the oil regions created many millionaires, they left many more paupers. Instead of building up an industry, most producers preferred to drain their wells as quickly as possible in this harem-scarum atmosphere. Blah, blah, blah. Searching for oil was wildly unpredictable, whereas refining seemed safe and methodical by comparison. Before too long, he realized that refining was the critical point where he could exert maximum leverage. All right, there's a really great... Actually, I'm going to miss the last sentence. But basically, it's like so it was very, very similar to early crypto, right? It was like there would be these massive gushers. It would tank the price of oil. Everyone viewed it as massively speculative. There would be boom towns that, cropped up in the period of a month, and then a year went by, like all this gambling, millionaires, and then it all went bust like instantly. And John D just, honestly, the thing that he did was he levered up. Every single time the industry went bust, he borrowed a lot from the bankers, and he bought his competitors, and he put it into a system. He was a rigorous operator, and that guy won more than anyone's ever won in the history of business. So,
right.
Yeah, I think there'll be people like that.
This happens with every industry, by the way. This was the 90s and the tech boom and the internet boom. Like this was, this has happened. Like this same exact story has happened so many times. This is like whaling back in the 1920s. Like all of these industries kind of like ultimately have that speculative fervor drives activity and attention, and then eventually you build a market structure and an environment where you have long-term durable value be what differentiates. And like we're in that transition right now. And it's tough for the people who came in with the expectation of a quick buck and a quick flip, but that's not what is going to work anymore. And like the jig is up. And I am very excited about us transitioning through, and the people who want to be on that other side of the transition are going to be there with us. But yeah, the people who weren't, flavor of the month type people were never going to survive anyways. And we've had, there are like crazy stories of founders that we've worked with who like lost hair and like, had like health issues, and like, it's just like, you can't have that be the thing that like, you bake so much into that you can't survive. You can't make it. You have to have it be a certain time frame. And like if it's another couple of years, like you're never going to be able to last that long. Like there has to be something that's a little bit more sustainable.
Agreed. Let's talk about, there was an interesting story that came out this week. So Binance got a $2 billion investment. I don't know if you guys saw this.
Yeah.
Here, I'll pull it up here. Let's see. Actually, there were a couple of interesting Binance-related stories. So the Wall Street Journal reported that the Trump family had at one point been in talks with Binance US arm. CZ has since come out and said that those talks had never happened. But, so a little bit of a...
The Wall Street Journal is the worst. I mean, it is like a good newspaper, but it's just like they want to bomb every country. It's like basically like the Business Roundtable's mouthpiece. Like they're like anti-Trump, and like they just report shit that like never happened.
So all right, the investment. So that was one part of the story, and then it was the Abu Dhabi firm MGX. So this is a single largest investment into a crypto company, beating out FTX's $1 billion Series B and NYDIG's $1 billion private equity round in 2021. And, probably bears saying that those are obviously happening at very different times. By the way, what is happening with NYDIG? That's a name I haven't heard in.
I was going to say, like, not good company to be in.
Yeah. Wow. I mean,
just the size of those investments leading to poor outcomes.
Yeah. So NYDIG is the subsidiary of Stone Ridge Holding Group. They were huge back in 2021. I remember.
I think they put the GBTC trade on. I don't know how that ended up for them.
Yeah, I'm not sure either. But anyway, what do you guys make of this? It's interesting, massive investment from a sovereign wealth fund here. This is obviously under Richard Tang's, the new CEO's leadership.
These are all things that we wanted to happen, right?
Yeah,
3 years ago, and just like everyone's so butthurt about like a macro collapse that like they kind of can't see the forest for the trees. What this does not mean is that like your random altcoin is going to come back.
Yeah.
What it does mean is that the people who build things that are real are going to have a very wide aperture to monetize and distribute them.
I think that's also just like, obviously this signals to everybody. And the reason why this is valuable is there are massive investment firms or sovereign wealth funds that are looking for how to get exposure to this industry writ large. And Mudabla, or however you pronounce it, was on the list of the Bitwise or the iShares Bitcoin ETF. Like, you can imagine that sovereign wealths are looking at this as well, and we want to invest in the equivalent of the John D. Rockefeller refinery, aka Binance. We want to buy the underlying asset, aka Bitcoin. Like, they're looking at this industry from a holistic perspective. And imagine that, they're starting with the things that are the most obvious and the things, frankly, that they can probably get past their IC fastest. And then they're eventually going to like trickle down into things that are a little bit more speculative and smaller size, but the things where they want to really, play some bets. But I think broadly, this is just a signal to the rest of the world that this industry is here and people are taking it very, very seriously.
Yeah, I completely agree. Also, Binance is just a monster business. I mean, if you look at the volume that they put up versus all the other exchanges combined, it still shocks me just how dominant they are.
And that's the other point too. It's like, why did Binance do this? And I think that they recognize they don't need the money, right? But I think what they recognize is the signaling factor. And that's probably the benefit to them, is that this industry gets that signaling factor and they get to be the conduit for it.
Yeah. All right, so I'm looking at CoinMarketCap here, and admittedly, CoinMarketCap is owned by Binance, but I would assume these numbers are still right. So in the last 24 hours, Binance did almost $20 billion of volume. Bybit did 2.3, Coinbase did 3.1, OKX did 2.8, Upbit 2.1. It's somewhere in between 2 and 3. BitGet, Mexi, Gate.io, Kraken's at 1. It's crazy.
They're 10x bigger than their next competitor.
Yeah. It's nuts. Actually, wow. I didn't realize here that HTX, I guess this is Huobi, actually did about 6. So they're still putting up massive numbers. But yeah, it's complete. It's just wild how like the market share that they have still in like a massively crowded, pretty commoditized space. It's like, what are you really competing on? I guess there's different, regulatory jurisdictions, something like that. But yeah, they've just dominated. Been super good for super long. Yeah. Now, is CZ, he's still not allowed to be involved in the management of that company at all, right? He's still the largest shareholder. He's out of prison and has been for at least a couple of months. But he didn't have to divest, I don't think. But he's not allowed to touch management stuff, right?
I think there was some fine paid. I don't think he had to sell and yes, he was there for 4 months and then is out since. And look, I think CZ's coming back too. Like there was some announcement of his like family office or whatever you want to call the entity that's investing. We anecdotally, like we've seen them be more active. Like he's definitely back and definitely looking at this industry, with a concerted approach and wanting to deploy capital into it. So I don't think it's Richard Tang at Binance who's running it, and I don't think CZ's involved there at all. But it doesn't mean that he's not gone.
I would imagine it's tough for a guy like that who is he's such an entrepreneur and a CEO and just an operator. I'd imagine it's really difficult for him to fully pull himself out of it at this point. But I'm sure he's complying or doing whatever he needs to do, right?
Comply.
Hopefully, yeah, right.
He'll be okay.
Yeah, he will. Traders, AI enthusiasts, and degens, listen up. The game is changing, and Desk is leading the charge. To celebrate their launch, Desk is running a trading campaign with 3 major highlights. 38% of their token supply will be allocated to airdrops. They're offering the lowest trading fees on Earth, and finally, they will be running a Desk referral program. The more people you invite, the bigger your rewards will be. To get started, click the link in the show notes below and make sure to follow at Trade on Desk. This episode is brought to you by Morpho. Morpho is the first and only DeFi protocol Coinbase has integrated directly into their main app, giving millions of users access to borrow against their Bitcoin on Coinbase. Just as Web 2 companies like Google, Amazon, and Meta were built on internet protocols, the largest financial companies of the future, such as Coinbase, will build on decentralized protocols like Morpho. Whether you're an individual, fund, fintech, or institution, Morpho is for you. Follow the link in today's show notes to try Morpho today. I guess, last thing is, all right, so just an update on, so we had this was a full week ago today, but I'm curious to get your reaction there. There's this big, White House summit, Digital Asset Summit is actually the name. And yeah, it's funny. Not the real Digital Asset Summit that's happening next week, baby. But we honestly, I'm curious to get your guys, and we also had the Genius Act, the stablecoin bill, moved to the House today. But in terms of the White House summit, it felt, I guess, editorialized, like we didn't get a whole lot, right? We actually weirdly started with like a FIFA presentation, like the head of FIFA. We got shown some trophy, and there's going to be FIFA coin. I literally thought I was in the wrong stream for a second. And then Bessent said, like Trump said a couple words. Bessent said some words about, the strategic Bitcoin reserve and something about stable coins as well, like Treasury being more open to working with stable coins, which I thought was really positive. And then everyone kind of went around the room and said, hey, this is great. We're not getting debanked anymore. And then we ended, right? It was about 10 minutes. So I don't know if you guys took away anything else, but yeah.
Kind of looked like everyone getting called into like the principal's office. Everyone's sitting like in ill-fitting suits just around the table. Like
I don't know the principal's office. I think it's more of just like everybody talk to the guest speaker and like let's present the elementary school and all of the brilliant children who are here. It's like
everyone getting like to ask a question. Look, like so. Maybe one framework to evaluate this is like the more anyone does of anything, the less valuable it becomes. The crime season was certainly like that, where it was like once everyone was doing crime, like no one was doing crime, like the marginal value of crime went down. And then, like the politics season where it's like who can take the most selfies with Trump. It's like we've culminated that with like this like, crypto summit roundtable, whatever you want to call it. But I think it's kind of like, to me, that's like the nail in the coffin of like, okay, cool. Like we've all showed how pro-America we are and we're all in suits on Capitol Hill. It's like, all that is like preamble to like, give us some rules, give us some legislation and let us duke it out. And like, if those people are still the relevant people after we duke it out, like that's great. But like my money is on that not being the case.
Right. Mm-hmm. Yeah, it's all signaling factor, and I think a lot of people are definitely taking the victory laps by being there and showcasing all of this stuff. But there's zero substance, and it doesn't actually do anything. What matters is happening. I think him calling out stablecoins is actually like him basically telling Congress, "Hey, whatever's about to come out with the Genius Act, and we can talk about that. Let's get this thing done." He's got a subversive way of communicating his intentions or his desires, and I think that that's exactly what it was. But I guarantee you, he doesn't know what the vast majority of the people in that room do, and probably never will. He's just looking at this as like these people, gave me a bunch of money to get elected. I'm going to give them 10 minutes of my time.
Yes, and like Trump, like he does not know what these people do, nor does he care, but he can see them coming a mile away. Anybody who wants something from Trump, like he's like I'm I'm watching your ass. Like I know exactly what you're trying to get. And I think what he's giving in return is like, oh, you want like all this stuff? That's great. I'm going to give you all of it. I'm going to throw your ass in the deep end of the pool and see if you sink or swim. And he's doing that to all these countries he's putting tariffs on. He's doing that to all these industries he's like doing these EOs into. And like, I think the whole point of like, if there is a reason to the madness of what he's doing today is like, we are going to set rules. We are going to throw everyone into the deep end of the pool. And then like the whole point of America is like, if you can make it, you're going to make it. If you're going to be great, you're going to be great. And if not, like, it's just the way the cookie crumbles.
Indeed. Yeah. I mean, that's what I think, that was sort of my takeaway from listening to that summit too. It's sort of like, if I had to paraphrase, it would be, hey, we're not going to debank you guys anymore. You don't have to worry about getting arrested, but you're kind of on your own. And I read Matt Levine wrote a really great piece today on kind of the difference in between, this idea of non-enforcement, and, use the analogy of, if you want to do something as a bank, like let's say you're operating in another country, you want to bribe someone, you go to your compliance officer, said, hey, can we do this thing? The compliance officer says no, because bribery is illegal and you could go to jail or pay a massive fine. Like, okay. But now there's this weird gray area where there's still a thing. And if you actually look at the example of like the Foreign Corrupt Practice Act, I think the FCPA. So Trump has said that he doesn't want to enforce that anymore. And so now it's like a little bit more of a difficult question if you go to your compliance officer. It's like, well, this is still probably illegal, right? So it's not being enforced right now, but it might, anyone could decide to enforce it again at any minute. And so, and it feels like that's actually the area that we're sitting at in crypto here, where, okay, you're probably not, there's not going to be an enforcement brought against you today. But it doesn't mean there won't be tomorrow. It doesn't mean Trump won't change his mind or the next administration won't come in.
We literally had this conversation.
You can be charged. I know this is going to be shocking. You can be charged for crimes committed in a previous presidential administration.
Like,
right.
The only way that changes, Mike, is frankly if the rules change, and that takes an act of Congress. And that's what we're working on. And that's what we keep talking about. And that's what we're seeing draft bill texts for. Like the whole sideshow of just like, oh, let's go and, dog and pony in front of the president is one thing and definitely has some signaling value. Maybe that's the extent of the value. But what really matters is what's happening, up on Capitol Hill and what's going to get passed. And even some of these things like the EOs, like those are the first things to go in the next administration. And so you can't, lean on that stuff to be able to build, whatever it is that you're doing. You really have to hope and work on, what's going on into the actual build, into the text, and make sure that those pass in the ways that you want them to. And I think that, all the people that are in DC right now, and I know that there's a bunch of, founders and investors and people around the industry who are spending a lot of time there right now, that should be the focus. And that's what we need to get done, because that's really what will have lasting value. Everything else is just, it's a press opportunity.
Agreed. Yeah. So maybe that's the takeaway here. Like this is maybe analogous to like 2004 and the tech. I actually remember someone was describing on a podcast, like, after 2001, it was so dead that there was one acquisition for like $25 million to revive the whole tech industry, which is insane given the scale of what's happening now. But, that should give you some perspective, right? I mean,
Google went public in 2004. I think the analogies here is like what happened with the internet bill, and I can't remember the name of it, but I think that was in 93 or 95. But there was a bunch of stuff in there. That's where Section 230 comes in. That's where you can use credit cards for commercial purpose. The internet can be for commercial purpose. You can put credit cards on it. SSL isn't like a weapon of mass destruction, or cryptography isn't a weapon of mass destruction when used on the internet. Like all those things that build the like basic building blocks in the market structure for how you can do all of this industry and all of this technology. Like that's the equivalent in my mind, and like that's what we're waiting on. But it's kind of weird in that the timelines don't match exactly. Where like we've already had the speculative fervor because there were no rules and it was gray area and it was regulation by enforcement. And now it's like we're asking for the rules, but like the speculative fervor is already passed. And so I think we're kind of like it's going to be an interesting, it's going to be interesting to see how this all plays out. But like the only thing that matters is the bills. Like that's basically it. And they're coming. Like the Genius Act is out. Like we know what it is.
Yeah, and like I think one of the saddest things is like trying to get like look like Bitcoin and ETH, like maybe put one or two or whatever, both of them in the Bitcoin or the strategic reserve. I think like startup founders simping for governments to buy their tokens is maybe the furthest straying from like the original cyberpunk ideals that are still very important. I'm very glad for that to be over. And by the way,
Me too, man. Me too.
Yeah.
Yeah.
It's like you do that instead of what with your free time?
No, we're going to destroy the banks. We're going to destroy the governments. But actually, wait, no. Now I need the governments to buy my token.
We do, yeah. We will need the governments to buy our tokens. Like, guess what? The biggest this is maybe how we should leave this podcast. The biggest buyer of your token needs to be yourself. It needs to be the treasury. It needs to be your earnings. Only then can you figure the rest of the hierarchy of needs out.
One more call to action here as well is that the reality is that there are going to be people that are willing to spend time in DC and advocate for their own interests. And
Totally.
I think I speak for the whole industry. I'm super appreciative of like the legal battle that Coinbase has fought and won on behalf of the industry. Massive debt of gratitude that we owe to them. Ripple, they spent, tens of millions of dollars basically, fighting the SEC on behalf of the industry. However, if we want DeFi and the more decentralized protocols to win, there has to be a voice. And there's like Coin Center and Chamber of Digital Commerce, et cetera, that advocate in DC. But if you are a, startup founder of a protocol and you have some amount of extra time and money, I would, at least consider maybe going to DC and making your voice heard. Because if you don't, like centralized exchanges, as great as they are and as much as they've done for us, like, there are differing incentives at some point from more decentralized protocols. And
100%. Regulatory capture 101.
Yeah.
Like, it's I've spent $50 million on this lawsuit. Like now it's my turn.
It's kind of an interesting, yeah. What do you guys think? I think maybe Vance, I can't remember. I asked one of you guys this the other week, but it's sort of interesting, right? Because Coinbase spent 125 million of their own money, right?
Yep.
It kind of does make sense. It's like fair is fair, right? They were the ones who forked it over. Like they should get something for that outside of just goodwill. But where's the line between that and regulatory capture? It's hard. It's tough.
I mean, like the Genius Act, if it's any indication, and the Market Structure Act will be more contentious because there's more moving parts and there's more ways to kind of like regulatorily capture things. But like the stablecoin bill is like pretty vanilla. It like just enshrines the ability to do it in the US with a rule set. And then overseas, you got to follow your own local regulation, and there needs to be reciprocity between the two jurisdictions. It's like there is no like, the bankers are taking your coins, or like the centralized exchanges are taking your coins, or you're taking your business. It's just like here are the rules. It's legal now. It can't be reversed by EO. Market structure will be very different. Market structure will be like, part of the current coin set will be declared unregistered securities. People will not like that. There will be some sort of grandfathering, some sort of sandbox, but like that will happen. And then there will be commodities, which like XRP, ETH, Bitcoin, Litecoin, maybe, those are those. And then there's going to be a whole swath of the market that's like in between, where it's like you can either become a commodity, and here's how, or you can, be a unregistered security / meme coin and basically like kill your roadmap and just like don't do anything. So people will be pissed over that, but the stablecoin bill, it's just like making stablecoins, which are the thing that's growing the most in crypto, legal.
Not necessarily legal. It's just it's a framework for how you can interact with them.
Sure. Yeah.
Right.
Yeah. Well, anyway, so maybe on a more optimistic note to end. If you're serious and have a long-term view, it's great, right? This is a great time to be in this industry.
Yes, this is like I actually think that this is the payoff year. It's just not the market payoff year. Like this is all the stuff that we've been asking for. This is all the stuff that we've wanted. Like you literally, it's people who are like burnt out and tired and all this. It's like you've literally, ran through the muck and the mud and like you've just gotten hit left and right and center, and like you're now going to throw in the towel like right as it's about to get better. Like we have like regulatory confines and frameworks like literally on the docket getting voted on in the House. I don't know. I like it, we're right at the precipice.
Yep, I agree. All right, fellas. Good one. We can land it there. See you in person in a couple of days.
Live recording.
Live recording, baby. Yeah, we're gonna do it.
Later,
All
guys.
right. Peace.
Peace.